Joining us now with a first on CNBC interview with the CEO of Bristol Myers. Meg, I send it over to you. And as I mentioned, we have a shareholder on the panel today, so he will be listening intently.
All right, Scott, thank you so much. Dr. Giovanni Caforio joins us now from the virtual JP Morgan Healthcare Summit. Giovanni, thanks for being with us. You know, one of the things you said this morning that I think made a lot of folks in the biotech industry's ears perk up was that business development is a top priority for you guys, even as you announced that $5 billion buyback for the first quarter. What should we expect from Bristol Myers in terms of business development this year?
Well, Meg, thanks for having me, first of all, at a very important time. Our innovation strategy is really very unique. It's based on combining the strength of our internal R&D with sourcing external innovation. That's what makes business development the core pillar of our capital allocation strategy. And we've done a number of deals over the last 18 to 24 months that are very representative of the type of focus we have in therapeutic areas that we know well, transformative science, and assets that we can bring into the company to advance their development to patients. And these tend to be early science deals, like the one we announced today with Century, and in some cases, mid-sized bolt-ons, like the acquisition of Myocardia, through which we acquired mavacamten, a really important cardiovascular medicine. So going forward, I expect we'll continue to be very active in business development and continue to complement what's one of the best pipelines in the industry by accessing what's happening outside.
What do you make of where the valuations in the biotech space are right now? I think a lot of folks in the industry feeling a bit beaten down after last year. Does that make some of these targets potentially more attractive to you?
Well, valuations remain high, although, as you mentioned, in some cases they're coming down. I think what's important to us is that we focus on areas of science where our scientists really know the field very well. We have deep expertise. In many cases, we follow companies for a long period of time. And so when we see that data has matured and we have an opportunity to reach an agreement at a value that makes sense for us and generates value for our shareholders, we are ready to move. So we're watching, obviously, the biotech space very closely.
And of course, Bristol Myers, as you pointed out today in your presentation, and analysts have noted, has one of the deepest patent cliffs in the industry coming up in the second half of this decade. But you gave long-term guidance today and guidance for the year, and your stock is up today. What do you see replacing that loss of revenue from some of these major medicines?
Well, it's a really important time for us, and I'm really confident that we'll be able to grow the company and accelerate the renewal of our portfolio. I'll start with 9 new exciting medicines that we're launching in a short period of time. That's really unprecedented. We've already launched 6 medicines in the last 2 years, and this year we are expecting potentially 3 approvals for really important products. So this is a tremendous opportunity that we have. We see those 9 products generating sales of $10 to $13 billion by 2025, and having total peak sales potential above $25 billion by 2029. I think what's important, though, is that we are more broadly advancing the rest of our pipeline. The pipeline has doubled. We have more than 50 assets in clinical development, and we have 7 medicines that are advancing through mid and late stage development. So I feel really good about our ability to grow the company through this period in which we have losses of exclusivity, but we have an accelerated opportunity to renew our portfolio.
Another interesting point you made is that because you're in this position of potentially launching these new medicines, you're in a perhaps better spot than some other companies if we see some drug pricing reform, that you can perhaps be more nimble when it comes to that area. Can you just tell us about that dynamic and what you're expecting from Washington?
Well, first of all, our portfolio is diversifying, and we'll have one of the youngest portfolios in the industry when our transition continues to advance. That makes our business very resilient. So the situation, obviously, in Washington is very fluid. At the same time, what I want to say is that I am really supportive of the right reforms, ones that make medicines more affordable for patients. At the same time, though, we must make sure that we continue to have an environment that is supportive of investing in innovation. That's particularly important for a company like Bristol Myers Squibb that invests in innovation, and we're all about growth through transformative medicines.